We all want to buy and hold a stock for the long term so that it can give an excellent return. Furthermore, getting a risk-free dividend even though the market goes down can be the best option, right? So how do you find those stocks that are not only risk-free but also come with appropriate dividend income? Well, there are several factors that need to be considered in this regard. However, if you want to skip all that hard work, you can simply watch this video until the end. What's up guys, welcome back to Glory Investing Show. In our today's video, I'm going to tell you about the 3 risk-free dividend stocks for the year 2022. The first risk-free dividend stock on our list is STAG Industrial Inc. For those who don't know, STAG owns and operates single-tenant industrial properties across the US. Specifically, it owns 517 properties covering 103.4 million square feet of leasing space and a market cap of $7.7 billion. The property portfolio comprises warehouses, distribution hubs, and manufacturing services. Now, the first thing that you should be interested in is that roughly 43% of the properties are warehouses and distribution centers related to e-commerce. Now, as we all know, e-commerce is a growing sector every single year. The growth rate for e-commerce in 2021 was forecasted at 16.8%. Now, most of us know that some of these e-commerce stocks over the past couple of years have been high flyers and great companies to own. But you may want to own an e-commerce space in a little bit of a different way, and that is through real estate, and STAG fits that bill perfectly. One of the STAG's largest clients and tenants is the big dogs themselves, Amazon. Now, they only make up 4% of the total tenants for the company, which proves that STAG has a very sophisticated and diverse tenant base. STAG is a monthly dividend payer that pays a dividend yield of currently a little over 3%. Over time, that dividend is going to grow, and not only that, it is also hoped that the share price of STAG will grow as well. In the current trading session, STAG Industrial closed at $44.51, marking a 0.72% shift from the previous day. This change wrapped the S&P 500's daily gain of 0.92%. Elsewhere, the DOW gained 0.51%, while the tech-heavy Nasdaq added 0.54%. So far, the shares of industrial real estate had lost around 3.26% in the preceding month. In that same time, the finance sector gained 3.59%, while the S&P 500 lost 0.85%. STAG Industrial is hoping for strength as it is near to its next earning announcement that is predictable to be in the mid of February 2022. STAG is anticipating earnings of $0.52 per share that will represent the year-over-year growth of 6.12%. One of the latest consensus approximations is calling for quarterly revenue of around $147.06 million, that is almost 13.16% from the previous year period. You might also see the recent changes to forecaster estimates for STAG. Current revisions tend to imitate the latest near-term business trends. In view of this, we can consider a gauge updates as an indication of idealism about the organization's business standpoint. As an investor, you should keep in mind that STAG's current valuation metrics as well as its forward price earnings ratio of 20.51. In contrast, its industry has a regular forward price earnings ratio of 15.46. It means that STAG Industrial is trading at a premium. Now, before we go any further, make sure to subscribe to Glory Investing Show and don't forget to hit that bell icon so you never miss any updates. Now, let me tell you that the price of STAG is $43.22 per share with a 52 weeks range of $29.40 to $48.27. Moreover, the PE ratio is 39.94 and EPS is 1.24. The company also pays a yearly dividend of 3.35% and its one-year target estimate 47.29. Yahoo Finance has a recommendation rating of 2.2, which means it is a buy. STORE had to go through a major challenge during the year 2020. It not only just survived but also put the shareholders first and increased the dividend. The improvement may have been a token amount, but STORE was able to do that during the pandemic year. STORE Capital possesses single-tenant properties for which tenants are liable for the major portion of the operating costs. STORE Capital owns almost 2,800 properties and has a market capitalization of around $9.5 billion, and the company has colossal development potential in front of it. The best is yet to come for STORE due to the reason that it has a sizable business that is built on a powerful foundation. It looks to upsurge its scale through further direct sale-leaseback transactions. The investors will get the benefit along the way from an even dividend rise. No doubt, the ongoing pandemic has created some near-term breezes, But Store Capital's success through this tenure just fortifies the case for its long-term potential. So there is a bright future here. At the recent share price, its yield is around 4.5%, so investors' interest in that income can provide some protection against a substantial stock price drop. This yield has been advanced at times, but sometimes it's worth paying a premium for a company with robust growth prospects. Investors' interest in that income should provide some shield. Here it is important to note that Store Capital is by and large somewhat forceful with its development methodology. Given its size, contributing $1 billion to obtain properties during the initial 9 months of 2021 is a quick development rate. Nonetheless, when you consider the economy Store Capital is getting, it seems okay. Store Capital Corporation price per share is $32.83 with a 52-week range of $30.64 to $37.13. The market cap of this company is $8.953 billion and the PE ratio is 35.57. Moreover, it pays an annual dividend of 4.6%. Here, it is important to note that Yahoo Finance's recommendation rating for this stock is 2.6, which means it is a buy. The normal introductory rate of return, working pay as a level of cost, on Store's 2021 acquisitions has been 7.7%. In the meantime, the normal loan fee Store Capital pays on debts issued in 2021 is simply 2.8%. That is an amazing spread. Let me tell you one thing, Store Capital has a wonderful chance of becoming a great market-beating dividend stock to own for a longer period, so it can be an excellent addition to your portfolio. Ally belongs to Zacks financial consumer loan industry, which can be a great contender. The past week has been very beneficial for Ally investors. Markets are a strong pricing mechanism. Prices of shares imitate investor feelings, not just fundamental business performance. One method to check how the market sentiments have altered over time is to take a look at the interaction between the company's prices of shares and its EPS. For the prior reported quarter, Zacks consensus estimate was $1.96 per share, but Ally came in front with the earnings of $2.16 per share, which is representing a surprise of 10.20%. For the prior quarter, Ally was anticipated to post earnings of $1.55 per share, but actually showed the earnings of $2.33 per share, that giving a huge surprise of 50.31% increases. Keeping this earning history in mind, current approximations have been moving higher for Ally. In reality, the Zacks earnings ESP for the company is positive that it is a good sign of earnings beat, especially when you syndicate the metric with its nice Zacks rank. According to various reports, 5 years ago, Ally was not much profitable, but things became totally changed 3 years ago when Ally financial share price gained almost 102% in 3 years. In the current trading session, Ally Financial closed at $49.91, that is 0.91% increase from the prior day. The stock outperformed the S&P 500 daily loss of 0.41%. Ally Financial is looking to show power as it is closer to its next earnings announcement that is anticipated to be on January 21st this year. Further, Ally is predictable to report earnings of just $2.01 per share. It will represent a year-over-year upsurge of around 25.63%. The company has said that the board raised the quarterly dividend by 30 cents per share. The latest consensus approximations are calling for revenue of $2.06 billion, that is more than 4.03% from the last year's quarter. Ally has also satisfied its shareholder with a total return of 36% in the last 12 months and it also includes the amount of dividend. The gain is greater than the total shareholder return over the past 5 years that was only 23%. This is the reason that the sentiments nearby the company have been positive recently. You can view the latest improvements in total shareholder return as representing that the business itself is getting superior with time. The price of Ally Financial is $51.21 per share with a 52-week range of $36.33 to $56.61. The market cap of the company is $17.747 billion and the PE ratio is 6.23. On the other hand, the EPS is 8.22 and the company pays an annual dividend of 2.28%. You might also want to know that Yahoo Finance's recommendation rating for this stock is 1.9, which means it is a strong buy. Well, that's all for today's video and thanks for watching it. If you liked it, make sure to give it a thumbs up and share it with your friends. And lastly, If you have not already subscribed to Glory Investing Show, subscribe to it and press that bell button so you'll be notified each time we upload an interesting video on this channel. And while you're here, click to watch one of these two videos that are appearing on your screen. We'll see you there. Take care and stay tuned.